Cause me and all my angels shot the devil up. I leveled up twice, I leveled up 3 times. I leveled up twice, I leveled up 3 times. I leveled up twice, I leveled up 3 times. I leveled up twice, I leveled up 3 times.
Hi traders, welcome back to another part of the market structure series. So if you are coming across this channel for the first time, Rich Rosie here, and on this channel we discuss everything trading to keep you profitable in the financial market. So if you haven't subscribed to the channel, kindly take time to do that right now, and I promise if you stick with us for some time, your trading life is not going to be the same again. I promise you that. So kindly subscribe to the channel, and by the end of this video, if you don't understand anything, kindly leave it in the comment section. I'll be there to attend to all your questions, right? Now, this is just a continuation from the previous video. So we are just going to quickly round up with the theoretical aspect of the concepts, and then we head on to the chart and see how we can apply this mechanical framework on the chart so that you can begin to see how everything connects together, right? So without much ado, let's get straight into it. So in trading, if you want consistent results, then you need to be very consistent with your actions, right? Now, I said this because in the market, you cannot move the market. You don't trade a large sample of money or a large amount of money in the market so that you can influence the outcome of trades, right? So because you can't influence the outcome of every trade, then you need to be consistent with your actions so that you can get consistent results in a large sample of trades, right? So one of the ways to be able to stay consistent in the market is by utilizing a set number of time frames in order to build that consistency with regards to market structure. Because remember, we said market structure is the core basics of everything. So if you have consistent time frames in mapping your market structure correctly, then every other thing is actually going to fall in place. So one of the ways to actually build a consistent action for a consistent result in the market is by utilizing a set number of time frames across your market structure, right? So that you'll be able to build that consistency. Now, you need to understand that this is very, very important, because if you don't have a set key number of time frames that you use, you end up trying to build a narrative by jumping on different time frames. You're actually going to get yourself confused. But if you have a set number of time frames, a set key number of time frames, and you are being consistent with them, there is a guarantee you're going to get a consistent result, right? Because the result is actually going to be an after effect. So if you have consistent actions, you're actually going to have a consistent result, right? So this is my personal approach to the market, right? This is the set number of time frames that I have. Now, as a trader, after defining the type of trader you are, maybe you are a day trader, an intraday trader, a swing trader, or a position trader, you need a set key number of time frames, right? What you need to do is to pick 3 time frames. Don't go beyond 3 time frames, right? This is actually going to help you. So you need to have your higher time frame, you need to have a medium time frame, and you need to have a lower time frame, which is your execution time frame, right? Now, you can decide to go beyond this 3 time frames, but then you need to stay within these 3 time frames. You can go beyond the 3 time frames just for you to see the overall picture or the overall trend, to know the overall direction of the market. That's fine, but don't go beyond 3 time frames, right? Just have your higher time frame, have your medium time frame, and have your lower time frame, which is your execution time frame, right? So this is my personal approach to the market, right? So I actually use the daily time frame to give me a perspective, right, to give me the overall direction of the trend. Now, my main higher time frame is the 4-hour time frame. That's my main higher time frame. So I use the 4-hour time frame to know the narrative of price action. Then I switch down to the M15 to get my immediate buyers, because I'm an intraday trader, right? So I need to have an immediate direction of the market. So my M15 gives me my immediate buyers of the market. Then finally, I switch down to the lower time frame, which is my M1, for my timing entry. So this is actually where waiting to see how the market is actually going to give me an entry. This is just my personal approach to the market. So now, how do I apply this set key number of time frames anytime I open my chart? Now, there are a set number of questions I ask myself with regards to this time frame anytime I open my chart, right? Now, with the daily time frame, I ask myself a very simple question. when is the 4-hour trend likely going to turn? Because if the 4-hour time frame is bullish, remember, a bullish market doesn't last forever. No trend lasts forever. So at some point, the bullish market is actually going to switch to a bearish market. So actually use the daily time frame to note my key levels where the 4-hour time frame is most likely going to turn, right? So that's how I use this particular daily time frame. Now the 4-hour time frame, now I ask myself, am I trading a pro trend or a counter trend? Now what do I mean by that? I simply ask myself, am I trading a pro trend or I'm trading a counter trend? Am I trading a run up or I'm trading a run down? Am I trading a run up or a pullback? I need to know where I am. Because if you don't know the current situation of the market, you cannot do anything. So you first of all need to identify the current situation of the market. Then based on that, you can take any decision in the market, right? So that's basically how I use the 4-hour time frame, just to know whether I'm trading a 4-hour run up or a 4-hour pullback, right? Now with the M15, it confirms to me when the 4-hour continuation is ending and the pullback is starting, or maybe the pullback has finished or is ending and a run up is about to begin, right? So let's say on the 4-hour time frame, I'm getting a run up to the top. Now at some point I'm going to get a pullback, right? So I use the M15 to actually confirm when this turn around or this pullback is about to begin, or when the pullback is finished and a run up is about to begin. So actually use the M15 to confirm the 4-hour turning points. Now with the M1, which is my execution time frame, actually use this one to confirm the M15 turning points, right? So the M15 confirms the 4-hour turning points, and the M1 also confirms the M15 turning points for me. It's as easy as that. Then I use the daily time frame to kind of know the overall direction of the market. So 1 minute confirms 15-minute turning points. Then the 15-minute also confirms the 4-hour turning points. 4-hour also confirms the daily turning points. So now all you have to do is to identify the higher time frame narrative. So when you know the higher time frame narrative, you go down to the lower time frame and monitor price action, right? Just monitor price action. And then you wait patiently and allow the trade setups to present itself to you. All right, so keep it simple and not complicated, right? Just have your 3 time frames. Have your higher time frame, your medium time frame, and then you have your execution time frame. That's all you need, right? Now, let's look at how you can define a bias. How do you find a bias in the market? You want to find an intraday bias, or maybe you are a swing trader or a position trader. You want to know the direction of the market, right? Now, looking at this diagram, clearly the market is bearish, right? Now, let's say this is a 4-hour time frame. Now, the 4-hour time frame is bearish because we just had a breakout structure to the downside. So clearly, market is bearish, right? Anytime you get a breakout structure to the downside or to the upside, the first thing you need to do is to identify your trading range, right? Now, in this case, you mark out your swing high and mark out your swing low. That's your trading range. Now, what is the perspective? The market is bearish, right? In our mind, the market is bearish. So what we are expecting is that we are expecting the 4-hour time frame to pull back, because after every break of structure, we're actually going to get a pullback, right? So we are expecting the 4-hour time frame to give us a pullback and give us a 4-hour time frame lower high. Then we'll get a continuation in that order. So that's our expectation, right? That's what we are expecting the market to do. Now, having gotten our 4-hour break of structure to the downside, we expect a pullback. Now, the pullback is actually going to be a trend in the lower time frame, right? So if this is my 4-hour, I'll jump down to the 15-minute time frame. So the 15-minute time frame has to be a bullish market to facilitate the 4-hour pullback. So for we to get the 4-hour pullback, the internal structure or the lower time frame, which is my 15-minute time frame, will switch bullish to facilitate the 4-hour pullback. So this is basically what I'm going to get. This is what I'm going to get, right? So the 15-minute time frame has to switch what? Bullish to facilitate a 4-hour pullback. So on the 4-hour time frame, you're actually going to see this as a single push to the upside. and then we are expecting price to go down, because that's the mindset, because we just had a break of structure to the downside. Hence, we define the direction of the market as a bearish market, right? Now, remember, nothing is 100%, right? So our expectation is that price is actually going to respect this strong higher low. Now, this is a strong high low because it was able to give us a breakout structure to the downside. So it has done its job, right? If you don't understand this concept, refer back to the previous videos. You understand the concept of strong and weak highs and lows, right? So in theory, we know that this particular high is a strong lower high, right? So we expect price to respect it and continue going down. So this is basically what we are expecting. We are expecting price to give us a change of character around this region. We expect price to give us a change of character around this region. So we are expecting a market structure shift. We are expecting a market structure shift as a confirmation that this strong higher low is actually, lower high is actually going to hold, and price will continue going down to give us the breakout structure that we are expecting, right? But nothing is 100% in the market. Anything at all can happen, right? So what could potentially happen is that price can get to that particular point and give us a breakout structure to the upside, right? Price can get to that point and give us a breakout structure to the upside. So because this is most likely going to happen, because remember that the market is not your father's house, right? And the market is not your father's company, and you expect everything to work in your favor, right? So you can have your directional bias, but then anything at all can happen in the market because you don't have a large number of funds to be able to move the market in the direction that you want, right? So because this is most likely going to happen in the market, your mission is to wait and observe. When price gets to a lower high like this, when price gets to that strong lower high where we are expecting a market structure shift for price to continue going down, when price gets to that point, your mission is to observe. Your mission is to wait and observe and see what price is actually doing at that particular point. So if price decide to break structure to the upside, then the overall trend has changed from bearish to bullish, right? But if price decide to respect it and give you that kind of confirmation that you need, then you can now start framing trading ideas to see how you can get an opportunity to trade it, right? So your mission is to wait and observe. Just because we are getting a 4-hour pullback and you are expecting to have a lower high, then we'll get a lower low to the downside, doesn't mean that when you get that particular lower high, just start entering. No, anything at all can happen. So you always want to wait for price to give you that extra confirmations that you need. It could be a market structure shift, it could be any other thing at all, but wait patiently for the trade setups to present itself to you. And if you're able to wait patiently for this, trust me, you're actually going to have consistent results because you are not just chasing price, you're actually waiting for price to present itself to you, right? All right, so now we are done looking at the theoretical aspect of this mechanical system. Now let's look at how we can apply everything on our charts, right? This is actually where everything connects. This is where you see the power of the system, right? This is where you see the power of the system. So let's kick off. Let's look at gold. It's like I took some positions on, okay. Let's see if we get some good examples right here. Now remember that this system, it doesn't matter the time frame you are trading, right? Once you have your time frames defined, that is your high time frame, your medium time frame, and your execution time frame, once you have everything defined, you can apply this particular system on every time frame. So it is cut across every time frame. You can apply this, right? Whether you're trading the 1 minute time frame, the 1 hour, it depends, right? So let's look at this price action. By the way, don't worry about these lines you see, these blue horizontal lines you're seeing. I actually trade gold in levels, right? So regardless of the strategy I trade, it has to align with market structure, right? So let's see. So right here we had a clean break of resistance to the upside, right? We had a clean break. Let me take these things out so that we can see everything clearly. Right. So we had a clean break of structure to the upside. So anytime you get a break of structure, what do? The first thing is to define the range you are trading within. So having gotten this break of structure to the upside, I have to define my range, right? So I need to look at the lowest point that led to the break of structure. So this was the lowest point that led to the break of structure. That becomes my swing low. Then we look at the highest point that led to the break of structure. So the highest point that led to the break of structure now becomes my swing high. So that's my swing points. Remember in the previous video, you first need to identify the range you are trading within. You need to first of all identify your your turning points, your highest and your lowest turning points in the market. So you need to first of all identify your swing points. So now we have the range, we have our swing low and our swing high. So now what do we expect? After every break of structure, we expect a pullback. So we are expecting a pullback, then we can have a new continuation to give us a new break of structure to the upside. That's the perspective. That's our mindset now because the market is bullish, right? Now, how do we know that the pullback is about to begin? How do we know that maybe this particular run up is finished and the pullback is about to begin? Remember, the internal structure has to switch bearish. That is, the lower time frame has to switch bearish to facilitate a higher time frame pullback. So in this case, our higher time frame is the 1 hour time frame. So we could switch down to the lower time frame to see whether the lower time frame is actually gonna switch bearish to facilitate a 1 hour pullback. We need to know this, right? So all you have to do after marking out the range is to go down to the lower time frame. So in this case, let's go to the 15-minute time frame. That's my medium time frame. Right now, I need to observe and see what price is doing. Right now, looking at the lower time frame, that is my medium time frame, we had a break of structure to the upside. So price gave me a low and a break of structure to the upside. So this is where I had my break of structure to the upside. Now I need to look at the internal structure range, right? I need to know the internal structure range. Now, this is the lowest point that led to the break of structure, even though we have these minor pullbacks, but we are looking at the lowest point that led to the break of structure, right? So now for me to confirm that the lower time frame is now bearish to facilitate the 1 hour pullback, I need to see a market structure shift or a change of character in the lower time frame. Right, for me to have a confirmed trend change in the lower time frame or in the internal structure, I need to see this particular low taken out. If this particular low is not taken out and it's any of these particular lows, then I'm not considering that as a proper shift in market structure, because what could happen is that price could take out all this, but remember that this is a strong low because it gave us a break of structure to the upside. So price could take out all this and respect this particular zone, and then we'll just have something like this. You understand? So all I have to do is to wait for this particular low to be broken. If this particular low is broken, then I have change of character to confirm that higher time frame is about to pull back. Right. You can also look at the internal structure and know what the internal structure is doing. So for me to wait for this, I realized that price was consolidating. So I just switched down to my execution time frame. All right. So I was on the 5-minute time frame. So market was giving me higher high, higher low, higher high. Now remember that this is the lowest point that led to this particular break of structure to the upside. So the range I am now trading within is this. This is my swing low. That's the internal structure. This is my swing high. So I need to see price trading below this particular level, then I can have a change of character, right? I need to wait for that to happen. I don't need to complicate everything. I just look at purely structure, not any other thing, just structure. And what happened? Eventually, price gave me that particular break, right? Price broke below this particular level. So I had my 5 minutes change of character. So at this point, I switched down to my execution time frame. I went all the way down to the 1-minute time frame, and I was waiting to see what price was going to communicate in the execution time frame, right? So I haven't gotten that particular change of character in the lower time frame, that was in the 5-minute time frame, I went down to my execution time frame to see whether I'll get an entry. And fortunate enough, I've had a fair value gap right here. So I placed my entry just at the midpoint of the fair value gap. So I just put a straight line there and I put my entry there. My stops slightly above. Then I target 1:5 minimum. 1:5 minimum. So I'll go back to the 15-minute time frame and target 1:5, right? That's basically how I trade. Now, remember, overall, the market trend is bullish, right? The trend of the market is bullish, but we're just trading the internal structure just because we know exactly what we are doing. We know exactly what we are doing, right? So I target 1:5 minimum. That was around this point. Yes, that was around this point, 1:5. Now we had a break of structure to the downside. So this is now a cleared market structure shift for me. That's a change of character in the 15-minute time frame. That's my medium time frame. So now this is a confirmation that we are going to get a pullback. Now, I didn't want to wait for all this to happen. That's why I decided to go down to the execution time frame to see what it is actually, because price is fractal, right? Price is fractal. Whatever that happens on the higher time frame will first happen in the lower time frame. So I knew that if this particular low was going to be taken, then I need to see that particular pattern printing in the lower time frame, right? So I targeted 1:5 and I took my profit. So the moment we had this market structure shift, a new range has been established. But remember, we are trading the internal structure because we have our swing high right here and we have our swing low. So what we are trading right now is just the internal structure. So having gotten this particular break of structure to the downside, a new range has been established, right? Now, this is the internal structure. Don't get yourself confused. So this now becomes the internal structure swing low and the internal structure swing high right there. So I need to wait for price to pull back, right? Now, I'm no more looking for buying opportunities for now. I need to sell all the way down to a point of interest below because we are in a pullback. So since we are in a pullback, I need to be selling until we get to what? A region where I think that price is not supposed to sell anymore. Then I'll stop selling, right? So I was waiting to see what price was going to do. So we had a pullback. After this break of structure, we had a pullback. Let me mark it for you. We had a break of structure to the downside. Here is it. So we need to get a pullback, right? Now, after this pullback, we need to sell off. Price need to sell off because this now becomes a strong high and this becomes a weak low. We know this because price breaks structure to the downside. It's as simple as that, right? So as price was progressing, moving to the top side, I was waiting to see whether I'll get a market structure shift so that I can get into the market. But unfortunately, I didn't get it early because when I came on charts, markets had already moved. So we had our market structure shift somewhere here. That was exactly where the market structure shift happened. So I was waiting to see whether I would get a pullback. So I went back to the 5-minute time frame to observe and see what price was actually doing, right? So after the market structure shifts, let me mark it so that you can see it. So this is where the market structure shift happened, right? So I was waiting for a pullback so that I could enter into the market. I was waiting for a potential pullback. Yes, I was waiting for a potential pullback so that I could enter and then price will sell off. But I didn't get that, right? So I was waiting to see what price was going to do. So price gave me a minor pullback. Then we had another break of structure to the downside. You can see it right here clearly. We had a new break of structure to the downside. So I marked the range. Let me just use this to make things fast. So I was now waiting for price to pull back so that I could get an entry and sell off because I knew price was going to sell because we need to get a pullback, right? Now, when price was moving up, I had my order block here already. I was waiting for price to tap into it so that I could sell. So when price got to the order block, now remember that price has the potential of moving up to this point before it will sell. So when price got to the order block, I didn't just start selling. I needed to see a confirmation so that I'll be sure that this particular order block is going to hold. That's my point of interest, right? So I switched down to the 1 minute time frame, and I was waiting to see what price was going to do right there. All right. So this was my order block, and that was my point of interest. So I was waiting to see a confirmation around my point of interest, right? So I was literally waiting for price to give me that perfect confirmation, right? So we had a market structure shift. The 1 minute time frame gave me a market structure shift right here. So I had this market structure shift on the 1 minute time frame. Now, this is an indication that this particular order block is going to hold, or this my point of interest is actually going to hold, right? Now, I need to look for my point of interest. I need to now look for where I am ready to take an execution, right? So I use this particular, now I'm not giving you entry confirmations, right? So this was my entry confirmation. This was another entry confirmation. So I was waiting for price. If price taps into this and give me a market structure shift, I'm going to sell. If price decide to come all the way here, I'm going to sell from there. So I took my sell position from there. This was where I took my sell position, and my stops just slightly above that range, and I target 1:5 minimum. 1:5 minimum. So let's go back to the 15-minute time frame or the 5-minute time frame to see. So 1:5 minimum. So that was it. 1:5. I took my 1:5 again. Right. Now I could take a single position here and be waiting for price to, go all the way down, and I could hold that. But you have to always make sure that you close the positions you have, right? Because remember, this particular position gave us 1:5. So if I had not taken this particular 1:5 and I was waiting for price to come all the way down for me to take my profit, look at this. Price came all the way back and took me out of the market because my stop loss was actually here. So price took me out of the market, right? So let's come back to the main range we are trading within. This was the range. That was our swing high, swing low, and this was our swing high, right? Now overall, we knew the market was bullish, so we're just waiting for price to give us a pullback so that we could enter a buy position, right? Now we didn't want to wait for this pullback because we the intraday traders, you can't wait for price to pull all the way down. It's kind of boring, right? You can't be waiting patiently for that. So you could actually trade the internal structure if you have the skills, right? So when I took this 1:5, I stopped. I was no more looking for selling opportunities because I knew price came all the way down to the origin that led to the break of structure. Right, price came all the way down to the origin that led to the break of structure. So look at it here. This was the break of structure. Price went up and price came all the way down to the origin that led to the break of structure. So as price was approaching the origin, I need to look for a point of interest around my origin. Now remember, this is a strong low because it gave us a break of structure to the downside. So we don't expect price to go below this particular low. This is what we are expecting. We had a higher high. We need to get a higher low and a higher high. That's the expectation. So we don't expect price to go below this. If price decides to go below this particular level, then we are having a market structure shift or a change of trend, right? Remember, change of character happens in the internal structure, but then if it happens around the external structures, that becomes a trend change, right? So I had my order block right here as my point of interest where I'll be willing to participate in the market. So price immediately came and tapped. I think there was news or something like that. So price came and tapped into my point of interest. So I need to go down to the 15-minute time frame. That's my medium time frame to see what price is doing, right? So let's see. Price tapped into my point of interest, but then price wasn't clear. I was not seeing a perfect price action. So price wasn't clear for me. So I went down to the 5-minute time frame. Right. I went down to the 5-minute time frame. to see what was actually happening. Good. So in the 5-minute time frame, this was what I saw. Price gave us a lower low and went all the way. Sorry. Price gave us a lower low and boom. So we had a market structure shift right here. So what do I do? So this is an indication that my point of interest is actually going to hold and price want to continue moving up. That's the narrative. That's what I have at the back of my mind because I'm just looking at only market structure, right? So this shift in market structure or this change of character we had right here is an indication that my point of interest is actually going to hold and price may be ready to move up, right? So what do? I look for a point of interest because this particular market structure shift confirmed this to me. So I need to now look for a point of interest to start my execution. So I saw a fair value gap, right? After the market structure shift, I saw a fair value gap, and this was an order block right here. So I had an order block in the market structure shift. So those in my mentorship, there are some criterias we look at when we want to take an execution. When we have an order block and a fair value gap, we first of all, no, I don't have to disclose this. I will reserve that for my mentees, right? So I took my entry at the fair value gap and I put my stop loss slightly just below the order block. So this is the order block. I put my stop loss right there and then I target 1:5 minimum. 1:5 minimum. So 1:5. 1:5. It's like 1:5 was close to a particular structure. So yes, this particular structure. So I was using this particular structure as my TP right here. So I went off the charts and I was waiting to see what price was going to do. So later on, I came back to check what was going on and price reversed. I was even in a drawdown. So price came all the way down and tapped into the order block. Now I've used my fair value gap as my first entry. So as price is coming, price need to use the fair value gap as liquidity and tap into the order block. Now this is deep and we'll begin to look at all these things later, right? So when price got to my order block right here, I was waiting to see what price was going to do. This is an order block. We will look at other blocks later. So this was an order block. So price tapped into the order block. I cannot just take the trade blindly, right? Even though I knew it was going to hold, but I don't have to take it blindly. I need to wait for a confirmation. So I had a market structure shift right here. But then that was in the 1-minute time frame. I need to go to the 1-minute time frame to see what price is communicating around the 1-minute time frame, right? So on the 1-minute time frame, I had a market structure shift right here. I had a market structure shift because price tapped into my order block. I had a market structure shift. So what do? I wait for price to reverse, then I'll take an entry, right? So because I knew what to do, I was no more on the 1-minute time frame. I was just on the 5-minute time frame, right? So I took all my entries on the 5-minute time frame because I had an order block on the 5-minute time frame because I didn't get any fair value gap right here to take as my entry, and price had already tested this. We call something breaker blocks, right? So price had already tested the breaker block, so I was now anticipating that the order block was going to hold. So price came all the way down and tapped into the order block, and that was my second entry. My stops slightly just above the order block, and what do? I target 1:5. Now let me shock you with something. Let's go back to the 1-hour time frame. Let's go back to the 1-hour time frame and then you see something. Now remember that the 1-hour time frame just gave us a pullback, right? We had our breakout structure to the upside and we had a pullback. So now our intention or our perspective is that price is going to give us a breakout structure to the upside. So what do? When you get your entry in the lower time frame, you can hold it all the way. So I have the opportunity to extend my TP to this particular point, right? And price is going to give me 1:11 risk to reward ratio, right? 1:11. You can see how powerful this is if you know how to use market structure, to confirm entries. Now, if I was just going to enter my trades blindly just around this region without considering all these extra confirmations in the lower time frame, just by looking at pure market structure, you could take an entry right here blindly. Your stop loss will be slightly just below here, and your TP will be here, right? You have 1:7. That is if you're taking the trade blindly. 1:7 reward. But you can wait for the market to present the setups to you in the internal structure with extra confirmation. You're actually going to get a huge risk to reward. And that's exactly what I got right here. 1:11. And now price is already in my favor, right? So the only place I'll be taking my TP is when price hits this particular level and breaks structure to the outside. Even though this particular one is 1:5 already, so even if this trade did not hit my TP, I will close 1:5 already in profits, right? So this is just how everything works, right? Now let's see whether we can get another opportunity or another example on a different pair. All right, so let's look at another example right here on Euro USD. So this is the 2 hours time frame. There are so many examples, right? Okay, let me go down to the 1 hour time frame. I think I took this position on the 1 hour time frame so that we can see. All right, so this is nice. Now on the 1 hour time frame, I had a break of structure to the downside, right? We had a clean break of structure right here. Let me indicate that break of structure. Now, what's the range I'm trading within? This becomes my swing high. And this becomes my swing low. So my range is defined, right? Now, after every break of structure, we need to get a pullback, right? Now, this is my higher time frame because I'm currently on the 1 hour time frame. So I need to switch down to the medium time frame to see what the medium time frame is going to tell me. Now, the medium time frame is actually going to confirm to me that this particular pullback is about to begin, or it will confirm to me that this particular round may be finished and the pullback is about to begin. That's what the medium time frame is actually going to do to me. So right here, I was on the 1 hour time frame. I think I just scaled down to the 5-minute time frame. I didn't want to waste time. So I went down to the 5-minute time frame and I was waiting to see what price was going to do. Good. So you can see it clearly. No, I think it was on the 15-minute time frame. I was on the 15-minute time frame because that's my medium time frame. I don't usually disregard that, right? Good. So here we had a perfect market structure shift. You can also call it a change of character. Now, pay attention to the market structure shift that I just marked. You realize that we didn't actually get a candle closing above this particular level. Good. We didn't actually get a candle closure, right? We didn't get a candle closure. Right, so we didn't actually get a candle closure. It's just a wick, right? We only had a wick closing above this particular level, right? Now, if you watch the previous videos, you understand this. When it comes to structure mapping, the type 1 and the type 2 I talked about in the previous video. When I'm considering a proper break of structure, I need to see a body of a candle closing above a key level, right? But if I am just looking at the internal structure, if I'm just looking for a market structure shift or what we call a change of character, I am happy just to see a wick like this, then I'll consider it as a proper market structure shift. So in this case, that was exactly what happened. I'm happy this particular price action actually explains that particular concept, right? So if you don't understand anything here, just go back and watch the previous videos. You understand this. So this is actually type 2, right? Yeah, I use type 2 for my internal structures, right? So this is a proper market structure shift, right? So after having this market structure shift, I saw a fair value gap right there. I saw a fair value gap right here. So I just put my entry there. I didn't have to waste time again. I just put my entry there. Now I could put my stop loss just below this particular candle. But to be at the safer side, I used the second candle as my stop loss. And I targeted a minimum of 1:5, right? A minimum of 1:5. 1:5, right? And it was so fast, even though price was consolidating, but it was so fast. Now, remember, this is the range I'm trading within, and market is bearish because we just had a break of structure to the downside, right? So all I have to do is to wait for price to retrace all the way up. Then I can get a confirmation entry to sell off, because now the perspective we have is higher high, or a high, lower low, lower high, and a lower low. This is what we are expecting price to do, right? So our expectation is that price will give us a new lower high, and we can get a new lower low. That's the expectation, right? So I need to wait for price to present everything to me. So you can see that if you are able to identify this particular range, you know the range you are trading within, and you patiently wait for price to present itself to you. Now, price just got to this particular region. I have a point of interest resting just above here. This is a fair value gap, but then I'm happy to just put my entry just above this particular liquidity zone. These are entry confirmations that I will not discuss right here. So now price just took out liquidity, right? I need to switch down to the lower time frame to see what price is doing. So let me go to my execution time frame to see whether I'll get a confirmation, right? So price took out liquidity and gave us a proper market structure shift, right? Price gave us liquidity. Price took out liquidity and gave us a proper market structure shift right here. So this happened on the 15-minute time frame, right? But then the 1-minute market structure shift will happen around this particular region. But I'm not actually looking at that because price has the potential of, giving us a pullback and move up again, because there's a particular point of interest I am looking at around this particular region, right? I have a fair value gap I'm expecting price to take. But then for me to consider selling, I need to see price taking out this particular low. If price eventually take out this particular low, then I'll be happy to get a pullback, then I'll enter. Then if price take out this particular low, there's an indication that this particular high is actually going to hold, right? And price is actually going to test, and then boom, right? So market structure is very, very important. Once you understand how to map your market structure, every other thing is actually going to be falling in place for you, right? There are so many examples. When you open your charts, you can spot this over and over and over again, right? So let's see. Should I break this down? Okay, so let's look at it. So right here we had a break of structure to the downside. There's a break of structure to the downside. Sorry, boss. Right. So after this break of structure, what do? Wait for a pullback, right? Now this is a clear break of structure to the downside. We need to wait for a pullback, right? Now I had my point of interest already because I knew the range I'm trading within. This now becomes my swing high. This becomes my swing low, right? This becomes my swing low. So I need to wait for price to pull back to a point of interest, then I can now sell off, right? So this was my point of interest. So I had to wait for price to pull all the way up to that region. That's if you want to be very conservative and you don't want to be rushing positions, right? You need to wait for price to pull up all the way to this particular region. Now, this was my fair value gap as my point of interest. Now, I need to switch down to the lower time frame to see what price is actually doing around my point of interest. And remember that the internal structure has to switch bullish to facilitate that particular pullback, right? So Let's see what happened. So I had my point of interest already, and price just tap into my point of interest. Now I don't just have to take a sell immediately. I need to wait for a confirmation, right? I need to wait for a proper confirmation. So I need to see price breaking below this particular low right here as a market structure shift for a proper confirmation that this particular point of interest is actually going to hold, right? This is just pure market structure. We are not looking at entry confirmations, right? But remember that this is the 1 minute market structure shift, right? The proper market structure shift should happen on the 15-minute time frame. So looking at the 15-minute time frame, this was where we had a breakout structure to the upside, right? So I was looking at this low and this particular high. So this low has to be taken out to confirm a proper market structure shift on my medium time frame. So I need to wait, right? So having gotten this particular market structure shift on my medium time frame, now I need to go down to the execution time frame to see what is happening right there. And we know that price always need liquidity to move, right? So I always look for liquidity pools or liquidity zones before I take my entry. So I swing down. Let me just take this off. I went down to it's like I took this entry on the 5-minute time frame or something like that. Let's see. So right. So this was on the 5-minute time frame. So I had my market structure shift, my proper market structure shift right here, and we had a pullback into this particular favor lookup, and I took my entry there. I think I took two entries, right? Two positions right here. My stops was just here, minimum, and I took another entry after a market structure shift. So let's look at it. Now, after this particular market structure shift, this one we had right here, because this particular market structure shift confirms that this particular position is going to hold, right? This particular market structure shift confirms this. So after that particular market structure shift, I need to find an entry again. So I look for my entry. This was a place for me to sell. I took another position right there. My stops right here. And a minimum of 1:5. Right, until we get a breakup structure. So let's go back to the 1 hour time frame. Right. So that was it right there. Very easy, right? Very, very easy. So it was 1:5. So that was it. That was just it. So structure is key, right? So let's look at this one again. Haven't gotten a proper market structure shift here. We had a pullback. So let me show you. We had a market structure shift, right? We had a proper pullback, and price is going down again, right? A breakout structure again. Price is pulling back. So this was another point of interest, right? So I had my range defined already. This was my swing high, and this was my swing low. This was my swing low, right? So I need to wait to see what price is going to do. So after this breakup structure, we need to get a pullback, right? Price has to pull back. I want to explain this entry for you. So I went down to whether 5 or 15 minutes, you're actually going to see it, right? So let me just stay on the 5 minute time frame so that we can explain things very quick. So as price was approaching my point of interest, right? Let me go to the 15 minute time frame. This looks so choppy. You get confused, right? So let me take this off. So this was the range. So we had a breakout structure. Price is pulling back. I'm expecting this. That's my perspective. Now I need to see a proper market structure shift, right? So this is where my market structure shift happened. That's where my market structure shift happened. Now this is liquidity zone. This is a fair value gap. So there are so many ways to take an entry, right? You can just put your entry just above the liquidity zone. You can also use the fair value gap. You can use the midpoint of the fair value gap and whatever you want to use, right? So I took my entry right there. I took my entry here. My stops just above here. And a minimum of what? 1:5. So it's very easy. It's very easy to spot these things. We'll do more practicals. Let me see whether we'll get something on GBP USD. Let's go on the 2 hours time frame. GBP USD. Okay, that's cool. I can see a whole lot, right? A whole lot. Market structure shift, pullback, boom. So let me explain this. I think this was one of the best entries again. After we had a break of structure to the downside, I was having higher time frame point of interest, right? So this particular order block you're seeing right here was a point of interest on the 4-hour time frame, right? After we had this particular break of structure to the downside, this is now the range, right? Now, after every break of structure, we expect a pullback, right? We expect a pullback. How do we know the pullback is about to begin? We look at the internal structure. Now, when price tap into this point of interest, it was a break of structure tapping into my points of interest. So I needed to see what price was doing right at that particular point. So I went down to my median time frame to observe price to see what price was actually doing there, right? So let's see. Excellent. Now we had a market structure shift. Let me take these things out. We had a market structure shift happening right here. So this is it. Boom. We had a market structure shift happening here. So this is an indication that my point of interest is actually going to hold, or maybe this rundown is finished and the pullback is about to begin. Still market structure. So what I did was to look for my point of interest, right? Now I scaled down to, was it 5 minutes or 1 minute? Alright, so I haven't gotten my market structure shift or a change of character in the medium time frame. I need to go down to the execution time frame, right? Now, at times I use the 5 minutes, at times I use just the 1 minute, right? So if I go down to the 1 minute time frame, it's actually going to look choppy, so you will not see what I'm trying to explain, right? So I waited for price to give me a pullback, but I didn't get a proper pullback right here, right? Because I was having a point of interest right here. So I need to wait for price to give me a proper pullback. So we had a proper pullback right here. And I took my entry here. I took my entry there. I took two entries. This was the first entry. Now, how do I confirm this particular point of interest that is actually going to hold? I need to see another market structure shift, right? So I had a market structure shift right here. You can see it right there. As a confirmation, the price is going to hold. Now, what do? I need to look for another point of interest to enter, right? There's a fair value gap right here. So I entered from the fair value gap. Oh, sorry. I took my entry from the fair value gap. My stops slightly above, and I target wherever I want to target. Let me go back to the medium time frame. So you can see it. So once you master market structure, every other thing is actually going to fall in place. Everything is going to fall in place. Trust me, everything is going to fall in place, right? So this was the pullback. Now, after every pullback, we'll get a continuation. So we had a break of structure to the downside. Now we are getting a pullback. Now, after this pullback, price will sell off, right? That's what I have at the back of my mind based on structure, right? Now, let's investigate something right here with a medium time frame. When price tapped into my point of interest, I need to get a proper market structure shift. So price came here. So I had my market structure shift right here. I need to wait for a pullback into a point of interest, then I'll sell. It's as easy as that. Once you master market structure, you will know exactly what to do. You will know how to take proper entries, proper and profitable entries, right? So that is it. Let's see if we can get another example. Okay, so, okay, good. All right, so this is also another example. Now, this particular entry, I missed this particular entry right here, and we had a break of structure to the upside. So I need to now know when the pullback is about to begin. We had a break of structure. We need to get a pullback, and potentially price will go up, right? So after this particular break of structure, I was waiting for price to pull back. So how do I know the pullback is about to begin? You need to go down to the lower time frame. So I go down to my medium time frame. That was the 15-minute time frame, to observe what price is doing or what price was telling me, right? So right there, I had my market structure shift. So price gave us lower high, sorry, higher low, higher high, higher low, higher high, and we had a market structure shift right here. So what do? I wait for a pullback so that I can get a confirmation here and sell. So my medium time frame just confirmed the pullback for me, right? So I need to now go down to the execution time frame to look for an entry, right? But then I had my other block right here. That is my point of interest on the medium time frame, which is the 15-minute time frame. So I'll be happy to take a sell just around that region. But then nothing is promised. So I need to get a confirmation around this particular zone so that I can take my sell. So I need to go down to my execution time frame. At times I use 1 minute, at times I use 5 minutes or 3 minutes, depending on the type of market I am seeing. If the market is too choppy, I just stay within the 5 minutes or the 3 minutes, right? Now I need to confirm this particular point of interest. I don't just have to take the trade blindly, right? And I use market structure for everything that I do. I use market structure for everything. Now, when price tapped into my point of interest, it's rejected. Then I had a market structure shift right here. After the market structure shift, what do? I locate another point of interest where I'll be willing to take my entry, right? So this was my other block. I was happy just to take an entry from there. So price retraced. I took a sell from that particular point of interest. My stops just slightly above. And then now this particular position, I left it open because of something. Let me show you. Let's go to the 1 hour time frame. So I left this particular position opened, right? I just left it opened because of something. And let me explain. So what happened was that price had a huge spike to the upside, leaving huge imbalances at the downside, right? Let me go to the 2 hours time frame. So look at it. We had a huge spike to the upside. Look at these huge imbalances. Huge imbalances. So definitely price will come and fill them in the future. So I left this particular position opened. I just left it opened. And this is 1:68 already. Right, this is 1:68 already. But then I'll be taking my partials, after every structure, right? So market structure is key, guys. Market structure is key. Once you understand this, Now remember that when we started, I've not been applying my trading concepts, right? Using the 4 hour, the daily, the medium time frame, and the execution time frame. Now I'm doing that because I just wanna let you understand that this particular system works across every time frame, right? It works across every time frame. If you are trading any pair, you can use this system. Trust me, you can use this system, right? So there are so many entries I can show you. So many entries I can show you. So many entries. So many. Right. After every break of structure, we get that. Now, let's look at this. Price rallied all the way up to my point of interest, right? I need to see a sign that price is going to sell before I will sell, right? So I need to see a market structure shift happening around this particular region for a confirmation that price is actually going to go down, right? Because remember that if you look at the structure very well, you know that the market is bearish. So we had lower low, lower high, lower low, lower high, lower low. As easy as that, right? So after every break of structure, we need to get a pullback. So if you look at what we had right here, after this particular break of structure, we need to get a pullback. How do you know the pullback is about to begin? Because you have to define your trading range. This becomes our swing high. This becomes our swing high. This becomes our swing low. That's the range we are trading within, right? So we need to get a pullback. How do you know the pullback is starting? Internal structure. Let's go back to the 15-minute time frame as my medium time frame. Right, your medium time frame can be any other time frame. You can use 1 hour, 15 minutes, 1 minute. You can use 4 hours, 1 hour, 15 minutes or 30 minutes. It depends on the individual, right? So let's see. How do you know the pullback is about to begin? We simply use the internal structure to determine that, right? So here we had lower low, lower high, lower low, boom. So market structure shift happened here. So price gave us a retracement. We could enter around this place and then price would go up. But then around that time, I wasn't on my charts, so I didn't even know what was happening, right? So I waited for a proper market structure shift because this was a major sign that price would go up. When we had this particular trend change right here, that was a sign that price would go up. So what do? I wait for a retracement. And there was a fair value gap for me to use as my entry. So I waited for price to come to my fair value gap and I take my trade, right? I took the position, as easy as that, right? Now we kept getting breakout structure to the upside. This was a breakout structure. breakout structure, breakout structure, breakout structure, and I kept applying the same concept just like that. I can't go through every bit of price action, but I just want you guys to understand that market structure is key. Once you understand market structure and entries, you are good to go, right? Let's see BTC. It's like I had some positions on BTC. All right, so this is what we had on BTC. Now, I was looking for buying opportunities. I was always looking for buying opportunities, right? Because I knew the market was bullish. So because the market was bullish, I was looking for buying opportunities. So I took a buy from here. And as you can see clearly that the market was bullish, we had breakout structure, right? Now, you have to always consider the ranges, right? You have to always consider the ranges. This is very, very important. Now, after this particular breakout structure, the range I was now trading within was this particular low and this particular high. So we had a pullback in a breakout structure. So the range now become this and this. Do you understand? So since the new range is now this and that, you see that we had market structure shifts in the internal structure. That doesn't mean the trend has changed. The trend is still bullish as long as this particular low is still there. As long as price hasn't taken out this particular low, we are still bullish. Remember the concept of strong and weak highs and lows, right? So the only time I started looking for sells was when price took out this particular strong low. Now, this was a strong low because it was able to give us breakout structure to the upside. So in theory, it is strong and protected. Now, this particular high took out this low. So now we are no more bullish. We are now bearish because a strong low has been taken out. So now this one now becomes what? Our strong and protected high because it was able to take out this particular low. Now this is the range we are now trading within. So now price has to pull back, right, to give us an entry. Then we can sell off. It's as easy as that. Once you master market structure, every other thing is actually going to fall in place. Now we had that particular breakout structure to the downside. We had this breakout structure. Now we established the range, right? This now becomes our swing high. This becomes our swing low. So wait for price to give us a pullback into a point of interest, then we sell. As easy as that. As easy as that. Just looking at purely market structure. Now let's go to the 30-minute time frame and let me show you something. So after this particular breakout structure, I was waiting for a pullback, right, into a point of interest and I'll sell. And this particular high right here, I was expecting price to use it as liquidity to sell off, but price didn't get there. So I went down to the 5-minute time frame and I was waiting to see what price is actually going to do. And remember that if you define your range, it doesn't mean you should start just taking sells or buys when price pull back to a particular region. You expect price to start selling, right? You don't just start selling because you had a proper pullback. You need to get a confirmation. You need to wait for price to present the setups for you, right? You see, when price retraced all the way up to this particular point, I was waiting for price to tap into this particular line, then I'll start selling. But price didn't do that. So I need to wait to see whether price will give me a confirmation or not. Right? Now, on the 1-minute time frame, price gave me a proper market structure shift. A proper market structure shift right here. I'm on a 5 minutes. Don't worry. It's the same thing when you go down to the 1-minute time frame. So we had a market structure shift right here. A market structure shift. And you remember the concept I taught in the first video. I'm happy just to see a wick. So in this case, we didn't actually get a candle closure below this particular level. It's just a wick of a candle. And remember the type 1 and type 2. I use the type 2 for the internal structure. So this is the type 2 that I use right here. And after this particular market structure shift, there was a fair value gap, right? So I used the midpoint of the fair value gap as my entry because it was a bit bigger. the midpoint of the fair value gap, midpoint, right? So just use the midpoint as my entry, my stops slightly above that particular range, and I target whatever, a minimum of 1:5, as easy as that. All right, guys, so you have seen how this system performs live on the chart if you actually master how to use this. Right now, we'll be doing a whole lot of practicals, but I still have some concept that I need to cover with you guys. You need to understand premium and discount. You need to understand what we call order blocks, fair value gaps and all that. I will explain everything into details so that we will start looking at the practical aspect of price. Right, so in the upcoming video, we're actually going to be looking at how to use premium and discount in combination with market structure to get sniper entries and to also get a high risk to reward ratio. Right, so in the next video, that's actually what we're going to be doing. So if you have found value in this particular video, kindly show your support by subscribing to the channel, like, and let me know how you feel about this particular video. Rich Rosie here. I'll see you in the next video. I'm out.